break before we get rid of this bloke.
You had a question about electric cars.
I did, yes. Tell us a bit more about electric cars.
So electric cars are great for tax, sole trader or limited company. So cars, company cars, where it's your own business, very rarely in the past have been beneficial because an individual, if they use it personally or it's made available for use, this is another big grey area. But if it's made available for use, for you privately, for you personally, you are taxed benefit in kind charge on that. So it means you're taxed effectively on a value that's applied to the vehicle. And so for that reason, if you're an employee and you're offered a company car, often it's a good deal. Lots of people will take that, or sometimes imposed on you if you're a salesperson. But where it's your own business, so effectively it's your money, often having a car in a company just doesn't mix. So it's always been a big no-no. With electric cars now and the tax rates that have been allowed on electric cars, they're extremely beneficial. So they are made available for the employee or director to use privately. And there is a benefit in kind charge, but it's extremely low. And we're talking, 3, 4, 5%.
Right. What do you mean by benefit in kind charge? Do you know what he means by that?
A little bit, only because
so effectively, a lot of it's linked to CO2. So if you have a polluting vehicle, right, you might have a high benefit in kind tax charge. Say your benefit in kind tax charge on a vehicle may be 37%. And so the value that is applied to your tax every year, it would, in that example, would be 37% of the list price when new. Doesn't matter if you bought it used or if you got a discount off of it. It doesn't matter. It's the list retail price of that car when it was new is what that 37% will be applied to. So let's just say that I'm going to use easy maths. Is 100,000, right? Let's say that vehicle is £100,000. So, like, say someone bought a Range Rover that is, heavily polluting, and it's £100,000 list price.
Yes,
they might pay 37% on that in terms of it, or have a benefit in kind value of 37%. So, on their tax return would go a value of £37,000, of which they would pay £37,000 would go on the tax return, of which they're then going to pay 20 or 40% or even 45% tax on. So really, is not very beneficial. The company also has to pay tax on it as well. Now, if it's electric and 100% electric, those rates are mapped out and they're going to be at the most 5% at the moment. And so that, you buy a Tesla or another fully electric car, Taycans, right? You see loads of Porsche Taycans, £100,000 car. The value on their tax return is now going to be £5,000 on their tax return, of which they will pay 20, 40 or 45% value on.
Right. So
you can see on even a £100,000 vehicle, the benefit in kind is very low. The benefit to the company is that it's going to get tax deductions for that vehicle. So if it buys it, it's going to get corporation tax deduction. If it rents it, leases it, it's going to get corporation tax deduction on the payments. And potentially you can even get 50% of the VAT back on those payments as well. So when you look at it as it's your company, your money, and the money you're saving in the company versus the small amount of personal tax charge you're going to pay, actually, they can be really quite tax beneficial. And of course, there's a reason the government have done that, because they want everyone driving electric cars to meet the CO2 emissions. No doubt when everyone's got electric cars, they'll stick the rates back up to 37%.
Of course they will.
But at the moment, and it is mapped out for the next few years, the rates are really good. So that is one way that we say to people, look, if you're looking at buying a new car and you have your own business, actually, up to a few years ago, we'd have said no chance. Don't even entertain the idea of putting a car in a company. But now we actively tell people, look, if you've got the available resources to do so, don't go and buy a car privately, particularly if it's going to be electric. Buy it through the company, because you are going to save tax. And that's a nice benefit, actually, that people can get these. And that's why you see so many electric cars, I think, because if you talk to people, I bet most of them have got their own businesses.
Right, so do it in my basic Simon Burridge way. This car's costing us £500 a month. All right, so we've bought it and it's costing us £500 a month. How much of that £500 will we be?
Well, can you put on tax?
So it will, a bit like your example earlier.
So
say your
we've got the grand.
We've got the grand. And you've paid out £500. Your profit is now £500.
Right. So it's that.
And it's that. Okay. So you're going to get a full deduction for it.
Yes, full deduction.
Exactly, providing it's 100% electric. And there are other rules about it, but check with your accountants. But providing they meet those requirements, you'll get full deduction for it off the tax. You will suffer a bit of personal tax on the benefit in kind value of it. But as I say, electric car, fully electric, very, very good. I mean, that's why, B&I is full of Teslas, right? It's the case, because that's the thing. Everyone's buying those. So yeah, well worth doing. The big thing that we find, and this is a massive kind of warning to people as well, is that often people will buy a fully electric car, but still even then not want to pay the benefit in kind value, or think they should do what's called a P11D for that. And they don't feel that the company should pay tax on that vehicle on the benefit in kind element, even though it's very minimal. They still don't. And their argument is, well, I work from home, so the fact it's parked at my house doesn't necessarily mean, I'm using it personally. I only 100%, I only ever use it for business. I never use it personally. It doesn't matter. If you never use it for business, but it's available for you to use personally, the tax charge exists. That is there. And that's such an easy catch. And people think, well, my business is at home, so of course it's going to be parked at home. But it doesn't matter. And the insurance will be covering you for social use and all that kind of stuff. If it's 100% business, you must be specifically, using a contract excluded from using the car personally. Your insurance shouldn't cover your personal use. And it shouldn't be available, so it shouldn't be parked outside your house overnight. It should always be at the place of work. All that kind of stuff. And that's what can catch people out.
At present for us, we just put our mileage in. We have our own cars.
Mileage is a great way of doing it. Yeah. It's such a simple way. And that's often, I think mileage is quite generous, actually. 45p a mile, and you have a fuel car, it's really, I think it's very simple.
And QuickBooks is good for that, because it just tells you where you've been, and you go, that was business, that was personal, and that's how I do it.
No, it's very good.